The holy spreadsheet, narration script before the Federal Reserve, before the Bank of England, before gold coins or paper money. There was a temple in ancient Sumer where priests didn't just pray, they calculated interest rates. This is the story of how humanity's first banks weren't run by merchants or kings, but by religious institutions that weaponized one revolutionary idea: that goddess credit was more valuable than any metal on earth. Picture Mesopotamia, 3000 BCE, the temple of the moon god Na towers over the city of Ur. But walk inside, and you won't find what you expect. Yes, there are altars and priests. But look closer past the incense and rituals, and you see something extraordinary: the world's first systematic banking operation. Here's what they figured out that changed everything. The Mesopotamian economy had a fundamental problem. Farmers needed seed grain in spring, but only harvested in fall. Merchants needed capital for long trading expeditions. Construction projects required upfront resources. The economy was starving for credit. Enter the temples. They already had three critical advantages. First, vast agricultural estates that generated consistent surpluses. Second, cultural authority that made their word law. Third, scribes who could read, write, and most importantly, calculate. But here's the genius move. Instead of just hoarding grain like wealthy landlords, the temples became intermediaries. They accepted deposits from surplus producers, maintained meticulous records on clay tablets, and extended loans to deficit spenders. They created liquidity. The temples of Mesopotamia had invented fractional reserve banking 3,000 years before anyone called it that. Let's get specific. How did divine banking actually work? A farmer comes to the temple of Shamash in spring. He needs 200 liters of barley seed. The temple's scribe records the loan on a clay tablet, the borrower's name, the amount, the interest rate, typically 20 to 33% annually, and the repayment date, post-harvest. But here's what makes it brilliant. The loan isn't backed by the temple's grain reserves alone. It's backed by the authority of Shamash himself, the god of justice. Defaulting isn't just an economic failure, it's a spiritual transgression. The temple has fused credit with divine enforcement, and when disputes arose, temple courts, presided over by priests, adjudicated debt cases. The same institution that issued credit also enforced repayment. They were simultaneously the Federal Reserve, Morgan, and the Supreme Court. Within centuries, temples across Mesopotamian cities, Uruk, Nippur, Lagash, developed an interconnected credit network. They accepted deposits from each other, cleared accounts, and even developed early forms of bills of exchange. A merchant in Ur could receive credit backed by a temple in Babylon. They had created the ancient world's first central banking system, all administered by priests, all denominated in grain and silver, all enforced by gods. This system made temples phenomenally powerful. By 2400 BCE, the temple complex at Lagash controlled more land than the king. It employed thousands of farmers, weavers, brewers, scribes. It was simultaneously church, bank, corporation, and welfare state. But this fusion of divine authority and financial power created something unprecedented: economic stability through sacred obligation. When debt spiraled out of control, when too many farmers lost their land, Mesopotamian kings would declare a misharum, a debt jubilee, often framed as the god's will. Temples would ceremonially cancel debts, free debt slaves, return foreclosed land. The system had a built-in reset mechanism, enforced by the very institutions that issued the credit. Think about that. The world's first bankers understood something we're still grappling with: that unchecked debt accumulation destroys the social fabric. That credit systems need periodic forgiveness to survive. That economic power requires moral legitimacy. We eventually secularized banking, separated it from religion, made it scientific, rational, mathematical. But we lost something to the framework that made credit a sacred trust rather than just a profitable transaction. The Mesopotamian temples understood that credit isn't just about interest rates and collateral. It's about trust, about community obligation, about the social contract between creditor and debtor. The clay tablets survive, thousands of them, filled with loan records, deposit accounts, interest calculations. The temples are ruins, the gods are silent. But the system they created, it echoes through history. Every time a central bank sets interest rates, every time a government debates debt forgiveness, every time we argue about the moral obligations of creditors and debtors, we replaying arguments first inscribed in cuneiform by priests who understood that money is never just money. It's always, at its core, a question of trust. The Mesopotamian temples weren't just running banks. They were running the world's first experiment in institutional credibility, proving that the most powerful force in finance isn't gold or grain or even law. It's belief, the holy spreadsheet, where economics and divinity first merged and changed human civilization forever.